Hello everyone, and you're watching Bitcoin Bubble News channel. It doesn't really matter how much you paid for it. More important is how many Bitcoins you have and whether you'll still have them when the price hits $1 million or $10 million per coin. Hey crypto folks, nice to see you again. Hello, this is Moji from Bitcoin Bubble, and I'm back with another video about cryptocurrencies today. If you're new, please think about becoming a subscriber. We release new movies every day that are all about crypto and Bitcoin. That was Michael Saylor saying that Bitcoin is going to be worth a lot of money, which you just saw in that clip. That's why you should buy it now, while Bitcoin prices are still low. And this is a clip from Michael Saylor that we'll be watching today. The talk happened not long ago. He just made another great work by Michael Saylor. That's right, he's telling you not to sell your Bitcoin and instead to buy more and wait. Besides Bitcoin, he talks about the problems with money these days and how it can help. This clip has a lot of good, useful knowledge. In the comments below, tell me what you think about everything Michael says in today's movie. Do you agree? Don't you agree? Does this make you more or less optimistic about the market? Tell me guys. As I already said guys, this is a great one today. Watch all the way through. Let's get right to today's clip. 1 acre of land in Miami Beach cost about $10,000 100 years ago. It's now going to be around 20 million. That means the price has gone up by 2000%. That is measured by a set stick. If you do the maths, you'll see that the US dollar is being boosted by 7% a year for 100 years. It's the strong coin that has weak current. That's the world's main currency going up and giving out 7%. That means that over 100 years, the rate of asset inflation has been 7% per year. That's how you go from $10,000 an acre to $10 million an acre. Now, weak currencies in the developing world are rising at a rate of 14% per year, unless they are being run badly, in which case they're rising at a rate of 21% per year. But let me tell you a truth. If you have $1 million at the start and keep it in dollars, which are rising in value by 7% a year, your $1 million will be worth about $700 after 100 years. But how much do you think it's worth if you hold it in countries that are losing 14% of their value? 28 cents. Okay, people are smart enough to know that investing $1 million that drops to 28 cents is not a good idea. So weak currencies don't last 100 years. However, the strong currency has made it worth $700 instead of $1,000. And that's how often the US has won all of its fights in the last 100 years. All of our wars are over. The question of what will happen to all of these currencies in these countries, the euro, the yuan, and the dollar is important. It doesn't seem to be that important. The important thing is whether you only have two options or we have three. You could keep your money in the world's greatest currency and lose 7% a year, have it cut in half every 10 years, or see it drop from $1 million to $70 in 100 years. If you put your money in a weak currency every 3 or 4 years, you'll lose half of it, going from $1 million to 28 cents. Or you invest your money in a wide range of conventional assets, such as conventional real estate. If you put your money into REITs, real estate that has been securitized, or SP companies, big companies, you should see a nominal growth rate of 7% to 8%. In real words, the money will lose 7% to 8% of its value. Also, the $1 million you have now will be worth the same amount for another million years. You won't have lost all your money. You won't have made anything. That means you need to take away the risk and responsibility from the asset class if you want to beat that 7% rate. The risks are that your property will be taken away, that it will be hit by an earthquake, a flood, rain, or the boss at the bank will steal the money. The risks are that a tenant in your building will set it on fire or not pay their rent, or that the mayor will control your property. A company like Nokia can't compete with Apple, BlackBerry can't compete with Google, and that company can't compete with AI, or you get a union. There are a lot of risks that come with Bitcoin, which is why traditional assets like stocks and real estate can't beat it, as well as the risks that come with having people run a physical place in the real world, where things like lightning strike and governments act. In the long run, Bitcoin could last for more than 100 years, in my view. It's the same as the difference between a 14% and a 7% inflation rate. If you look back, Bitcoin used to grow by 200% a year, and then it only grew by 100% a year. It's been 40 to 50% a year for the past 40 months. It makes sense then that Bitcoin growth would slow down at some point. This is where the difference between 14% and 7% comes in. It could make your $1 million into $1 billion. When you pay 14%, your $1 million is worth $1 billion. At 7%, your $1 million stays $1 million. Do you really want to double 10 times in a row? That's 14 to 7. Or do you want to break even 10 times in a row every 10 years? In the long run, you can be excited about hypergrowth in the short term. That's a lot of growth for Bitcoin, the 40 to 50% Bitcoin. I can think of a dozen reasons why it will keep growing by more than 14% over the next 10 years. Almost. But if you are, it makes sense to think about 100 years ahead, because thinking about 3 generations ahead is very clear and helps you avoid all the noise, misunderstanding, and anger. And everyone wants to use smoke and mirrors to trick you into giving them your money by making you juggle razor blades and other things. For example, if I told the royal family of the UK, oh, there's a pandemic in London, but not on this island in the middle of the Atlantic. I'll give you 1,000 acres in the middle of the Atlantic Ocean in exchange for the middle of London, Buckingham Palace, and Chelsea. Would you trade if you were scared? Because if you did, you will know you don't own anything valuable when the plague is over. And you gave up $100 billion piece of land in the middle of London. This is the reason why everyone will always try to scare you. They're going to lie to you all the time. They'll say, oh no, this is not safe, that's not safe. They want to get your Bitcoin. They might not even be aware that they're trying to get Bitcoin from you, but they do want to be important. Yes, this is what I mean. You have the most valuable thing in the world. You hide it and wait 100 years. After that, your family is rich. So why would you ever watch their TV show if that's the case? Why would you give them money? Why would you ever give them work? Why would you give them a 20% stake and a 2% management fee? Why should you buy their separate coin? Why would you want to buy their stock? Why do you want to hire them to help you? Why would you want to read what they write? Why would you watch their videos? Those things aren't necessary if you just buy Bitcoin and keep it. So the smart thing to do is to think like the Emperor of Japan or the King of England. After all, don't they own the middle of London since 1,000 years ago? Check out the royal family in the UAE. If you're not a royal, it's against the law to buy seaside property in the Emirates. Won't just give it to you. That's because smart people know that the nice property should be kept for another 100 years. No matter how much you bid, you can't buy the middle of Central Park. It costs too much for me to buy an acre of it. NICE won't sell it to me because they want to think about the long run. Since the park was built 100 years ago, it would have been a mistake to sell it for any amount of money that was more than 200% of what the park was worth at the time. It is always a bad idea to sell something good and buy something moderately good. Thanks for watching the whole movie. Please click the like button if you found something useful. My name is Aaron and I work for Bitcoin Bros. Thank you so much for watching our movies. Make sure